So welcome to everybody, to the persons that attend here in this room, but also to the many online participants. It's a pleasure to host this joint event with the ISSB and my dear colleague Emmanuel Faber. So of course, it is a milestone moment, which we will have the opportunity to discuss further during this session. It's not a very long session, but it is extremely important because we worked hard to get where we are today, and we want to share and somehow celebrate this milestone moment. So the session today is organized in the following manner. After the brief introduction, I will pass the baton to Emmanuel. We will have a presentation, summarized, but nevertheless comprehensive, of the document that we jointly prepared and published following our respective decision processes. By presentation by Lloyd, Vice Chair of ISSB, and by Chiara Prete, Chair of our Technical Expert Group at EFRAG. Then I will say a few words. Then Emmanuel will also intervene. And then we have the privilege of welcoming Alexandra Jour-Schroeder, Deputy Director General of DG FISMA, that will deliver concluding remarks. So without further ado, in light of the busy agenda and short time, I hand over to Emmanuel.
Merci, Patrick. Thank you, Patrick, for the welcome. We're delighted to be here with my colleagues, Lloyd in particular, Sam here with us, who's been working so much with your team, Patrick, and the FISMA team in delivering this really helpful tool, as we will discover very soon. I will maybe be able to comment a bit further after the first lesson ever made about that important work that was done. We are really happy to host this joint event together, so welcome everyone. Thank you.
So without further ado, we are going to change the name tags, and it's maybe you stand together. Yeah. Oh, you sit. No. We need to see you.
That's okay. But then we need the acrobacies to look at the slide. Ah, there. Okay, fantastic. So
I do everything.
Okay, so great to see everybody today for the first lesson, as Emmanuel has said, about the interoperability guide. But before we start our joint presentation, just a few words perhaps about the journey that we've been through, given that I was one of the people involved in this journey that's culminated in the publication of the guide just so recently. But we've been working together for about over 2 years now, and it has been quite the journey. We've had our moments, I think we'd all agree, but we're friends at the end of it, and we've got a guide at the end of it, so it was efforts all worthwhile. And I'm really delighted that we have landed where we have with this interoperability guide, which I really do hope is a helpful tool practically in the market. But before we talk about the guide, perhaps let's take a step back and talk about why, both from the ISSB side and from EFRAG side, not just put words in Chiara's mouth, that we think interoperability is just so very important. And it's because we want to build a new reporting system that gets sustainability information out there for various stakeholders to use. And we want to make sure that this is done in a way which is efficient for companies. We're really fortunate to be sort of starting almost with a clean sheet of paper with sustainability reporting. So we've got the ability to set up a system right from the start, which works well both for companies preparing information and for those using the information. So going back several years, we've been keen to work together to ensure that our standards work well together. So we don't get duplication in reporting for companies. We don't get the confusion in multiple sets of similar information that's a little bit different for those consuming the information. And so the interoperability journey has culminated in the guide, which explains how to think about interoperability. But it really started when we were talking about the content in our standards. And so the first achievement on interoperability was actually when EFRAG published ESRS last year, because we'd worked to make sure there's a lot of commonality in the content in the standards. So the commonality in our standards underpins the interoperability. So the guide's important, but it wouldn't work if we hadn't achieved that at a standards level. Now, if we move on to the interoperability guide itself, I think it's a really exciting document, maybe because I've dedicated a lot of my life to preparing it, but I think it is a really helpful guide. And it's because it's here to be really practical. It's here to explain to companies good news. There's a lot of commonality in the disclosures that the ISSB and ESRS have put in place, particularly on climate reporting, but also beyond climate. And what this document does is firstly, it illustrates the very high level of alignment in the particular disclosures we've achieved when it comes to climate. And it describes how to go about applying our respective sets of standards in an efficient way so that companies are able to really use their resources well to report to meet both the requirements in ESRS and in the ISSB standards in an effective way. We'll go through the content of the standard, but it's really here to make it more straightforward for companies to navigate between ESRS and the ISSB standards in an efficient and effective way. So we're going to go through the different parts of the standard, so I won't say too much here. Maybe, Chiara, is there something you want to add before we start sort of stepping through?
Well, perhaps one thing, but it's evident for everyone the importance of this exercise. And looking back at our consultation, at least on the ESRS, this was one of the most recurring comments that we really got from public, and in every occasion, in every meeting, it comes as one of the first 2 or 3 concerns. So really, and it's not only as Sue said, the work that we have done after the standard were closed, but more importantly, what we have done before that, and what we will need to continue also to do in the future.
So let's step through the different components of this guide. So we're not going to read the whole guide out, that's the good news, but what we'll try and do is to give you a flavour of what each of the key messages are in the different sections in the guide, to give you our sort of personal context and to how we envisage companies would use it. And I think one thing I do need to say at this front, and it is emphasised in the guide, the bad news is you can't not read ESRS or ISSB standards and just read the guide. If you were hoping for that, sorry, have to disappoint. You still need to read the standards, but these are designed to really be a tool to educate and assist those who are coming to use our standards. So the first section of the guide sets the scene for the whole guide. So it's really describing how to think about applying ESRS and the ISSB standards, how to present the information in a way that's efficient, and how to think about using one another's standards sort of to fill in the gaps. So what do I mean by that? One of the things we're really proud of, certainly at the ISSB, and I hope Chiara is proud as well, is that we managed to align the wording and the concepts and the approach to assessing financial materiality between the ESRS and the ISSB standards. We both ask for companies to determine ultimately the particular disclosures they provide to provide the information which is financially material. So the information that's reasonably expected to influence an investor's decision. We both ask for that. And the good news is when you think about that, both for us and for EFRAG, you can think about it in the same way. So you can make it your process efficient. In addition, of course, ESRS asks for impact materiality to be considered as well. But the core part that's in common is a common concept and it's aligned. That makes it easier for companies to do. Another key point, which is emphasised in the first section, is the presentation of the information that we ask for. And we're a bit different here. So we explained what's different, but what's in common. And there's good news here. You don't need to necessarily provide, two reports. You can provide a single report as long as you're careful in the way that it's presented. And there's things you need to be aware of. By design, ESRS is very particular about where the information needs to be placed. The sustainability information needs to be in a dedicated section of the management report, and the order and the sort of format of the information has to be provided in a particular way. So it's very specific. On the other side, the ISSB is less specific on this. We say the information has to be provided with the financial statements, and it has to be in the general purpose financial reporting package, but we don't specify beyond that. That gives the opportunity for a company to present the information in a way that can meet both our requirements and the European requirements, as long as you're careful. And you need to be careful because you need to make sure you've met the requirements in ESRS, and from the ISSB side, it needs to be the case that the information which is investor material is capable of being identified and compared with others who are just using the ISSB standards. So there's a very specific paragraph in IFRS S1 that you need to watch for, but as long as you're careful and you make sure that the information is visible so that that comparability is achieved, it's possible to meet both sets of requirements. The next most important thing that's in the first section of the document is explaining how we've worked hard, even beyond climate, to make sure that it's efficient as possible for somebody using both sets of standards. And we do this in two ways. ESRS is ahead of us in terms of its completeness because there are already ESRS standards on topics beyond climate, whereas for the ISSB, we've got specific disclosure requirements for climate only. But we do ask in our IFRS S1 for companies to report on topics beyond climate. And when you do that, we refer to particular sources of information that can be used. And we say that when you report beyond climate, you can use the ESRS requirements, as long as the information meets investors' information needs as required by the ISSB. So we use ESRS in a sense to fill in gaps in the ISSB standards. And there's good news in the other direction. The ISSB is fortunate because we've got industry-based standards already in place because of the SASB standards that are part of our heritage and because of the specific industry guidance which we included in our climate document. ESRS allows you to use our industry-specific information in the SASB standards and in our climate standard to meet the entity-specific requirements in ESRS, in particular before sector-specific standards are developed in Europe. So we've essentially used one another's literature to fill in the gaps. So you don't have to look for other sources of information. You can use that information for two purposes. And we set out our reliefs in both sets of standards in this section as well, and just say, make sure that if you use the reliefs, that you're careful that you'll still be compliant with the other set of standards.
Yeah, on perhaps just to comment also on this first content, the alignment of the definition of financial materiality is really a cornerstone, of course, because it's the core of the conceptualization of both sets of standards. So we facilitate enormously the understanding of the two standards, but it has also practical implications. It means that the same process of identifying the material information can be used for both sets of standards. And of this part of the introduction is very important to note that ESRS preparers are able to comply with IFRS S1 by using their ESRS disclosure beyond climate. And one point that I wanted to note on the presentation is, of course, that in digital terms, the identification of the common information will be which will also be facilitated. So that's also something to consider.
More taxonomy work to come. So lucky we're still friends, yeah?
Yes. Okay, so very, very proud to present to you the common climate-related disclosures, because at the end of the day, this is the main message that we want to give really with this guidance. There has been a lot of work to present, identify exactly the paragraphs that in one standard correspond to the other. So the fact that we have worked together with the ISSB staff to perform this work means that the practitioners, the companies, the auditors don't need to do it themselves again, and can rely on the work that we have been doing. In this sense, this is a concrete help to progress your implementation efforts. How it works, this section, we have a very simple two-column template, which follows the table of contents of IFRS S2. So this is the example on the strategy. You see the paragraphs of IFRS S2 where elements are listed, the content, and in the column ESRS you find where in ESRS S2 or in ESRS E1 the corresponding content can be found. Of course, I think you're familiar with the fact that for strategy, governance, and for the minimum disclosure requirements on policies, actions, and targets, we refer to ESRS 2. And then for metrics and targets, we refer to the topical standards. So that's why ESRS 2 is also important here. And we had long debates on how to present a certain number of items where the disclosure was essentially the same. It was exactly the same, but we as standard setters knew the background on how to read the terminology that on a first sight could seem different, but indeed in reality we meant the same thing. So we really wanted to keep these in table 2 because at the end they are aligned disclosures, but you find these footnotes, and I know that some don't like footnotes, but they are there to explain what are the bases for the alignment. Really, in table 2, you see the footnotes are the basis on our reasoning of why, despite having different words, we mean the same thing. And then you have one asterisk when additional relevant information can also be found in section 3. And section 3 is the section where we present points of attention for ESRS preparers that start from ESRS on climate and want also to apply and comply at the same time with IFRS S2. What do they need to do? Well, happily so, only a few things in section 3, because the vast majority of almost the totality of the disclosures are listed in section 2. And then we have the 2 asterisks, and this is another example on financial position, performance, and cash flows. 2 asterisks are used to indicate that additional information can be found in section 4. So this is the other way around, where a preparer starting from IFRS S2 on climate wants also to comply at the same time with ESRS. What do they need to do? They need to refer to section 4. So 1 asterisk and 2 asterisks is when in the same paragraph you have both elements that are in common and points of attention. Anything to add here?
Just if I was a company, what would I do with this? I think if I was a company, what this is useful for is if I need to or want to use both the ISSB and ESRS standards, you can look at this to see where it's possible to use one set of disclosures and one set of information to do 2 things at once to meet both sets of requirements. So you look here, you still need to read the paragraphs, but you look here and it tells you where to look. And I think that's really interesting. And it tells you actually there's some things you need to know to really get the best possible interaction between the 2 sets of standards. And so these asterisks are designed to really facilitate that understanding.
Then we move to the section 3. After this intense work of looking for the similarities, we were left with the list. I would say there were 20 at some point. Then we found our way to address them as part as common disclosures with footnotes. A part landed on this section. And this is basically these are points of attention for a company starting from ESRS, what they need to do, actually, what they need to know to also comply at the same time with the climate disclosure of the ISSB standards. And I think we have in total 7 topics for points of attention and points to consider, and 1 incremental and additional requirement, so incremental requirement in IFRS S2 that is not already covered in ESRS. When you look at them, many of these points are specific data points where we couldn't find exactly the same data point in the corresponding standard. So it's a point to consider. But in the context of a broad disclosure requirement that is aligned, and so there is already a list of disclosure data points that are aligned, but one specific data point belonging to a disclosure requirement wasn't exactly the same. So it's important to note that these are not 8 massive disclosures to prepare. These are 8 specific data points to be added to a disclosure that is largely common in terms of objective and rest of data points. And then, yes, we have a couple of the differences in substance. Just to mention one, the scenario analysis, which is a requirement in IFRS. So you are required to perform a scenario analysis as a basis for the resilience disclosure in IFRS, while in ESRS we have a requirement to disclose whether and how the scenario analysis is developed, first of all, to inform the materiality assessment, and when it's used for the materiality assessment, then it is also used for the resilience. So this, for example, is a different substance. Is important to note that. Also, the industry-based metrics, Sue mentioned that it's a different in substance, because in ESRS we still don't have. We're going to work in the future for them. Okay. And the other one is the financed emissions, where pending the issuance of sector standards in ESRS, we don't have this element, but we make reference to IFRS as a source for the companies to apply. Anything to add?
I don't think so. No, I think you did a good job. So the next section of the guide sort of does the same thing for somebody who's starting with the ISSB standards and wants to make sure that they meet the requirements in ESRS. So we list in this section the things you need to know to be confident that you can do that. And for me, both of the section that Chiara just went through and this one is, for me, something you'd probably spend your most time and attention on when you're first embarking on your reporting, setting up systems, making decisions the first time around, and then you might not have to go back to it that often, but it's really helpful to set the scene. So the good news is I'm not going to go through all of these bullet points here, but I wanted to highlight a couple of examples of things which highlight some of the differences that we identified, as Chiara said, points of attention to make sure that you're aware of things that would mean that when you provide these ISSB disclosures, you're also well equipped to meet the ESRS requirements. So let's look at a couple of those. One is that when you do the scenario analysis that Chiara was talking about to inform your resilience analysis, you need to make sure that you disclose whether and how you considered a scenario consistent with the Paris Agreement. That's something you have to do for ESRS, and it's not specified in the ISSB standards. Another example which we spent some of our longest conversations on was in the area of carbon credits. So the information that you might provide when you're talking about your emissions targets and when you have net targets, how you're using carbon credits and which carbon credits you're using. We've got some areas of specific difference here. In particular, there are some carbon credits which would be included in ISSB disclosures that would not be included in ESRS disclosures. And so you need to watch for that. You need to make sure that you're not describing something as a carbon credit when you're using ESRS that wouldn't meet the ESRS requirements. And sometimes you need to provide more information on carbon credits when you use S2. So you need to watch carefully, and you may need to provide two subsets of information to make sure that you've got the completeness that ISSB sometimes requires while being aware of the definitions in ESRS. So I would say that that's an important one to look at. I think the only other one that I will talk about today in the interest of time is probably on greenhouse gas emissions. I think you'd agree, Chiara, that this was another one where we did quite a lot of deep diving into the calculations around greenhouse gas emissions. Obviously a really important piece of information both in S2 and in ESRS. And we identified that good news, you can align the measurement for greenhouse gas emissions. If you choose the financial control method when you use S2, then you get off to a good start to be aligned between S2 and ESRS. But you need to know that in addition to that financial control measurement, for some particular items, and there's a list of them in paragraph 50B, I think it says, of ESRS E1, you have to use the operational control approach. And so there's an overlay of additional emissions metric calculation that you need to comply with the ESRS requirements. And so there's specifics on that. So you can see that's very nitty-gritty, but important detail that we've set out, hopefully to save you all some time. Did you want to say anything on that section before we get on to the next one?
Yes, this is also a very important component of the document because, as you know, ESRS cover a more broad list of disclosure objectives than IFRS. And that's the reason why in this table, you saw in table 3.2, there was only 1 point on financed emissions where the IFRS had an additional data point. In this case, we have, I would say, two different classes of additional disclosures. In gray, we have highlighted the ones that, and this is an example, of course, on governance. In gray, what we call incremental disclosure. It means that we have a common disclosure with the IFRS on climate, but the ESRS in the standard have made a step, an additional step in terms of standardization or detailing that information, or requiring a complementary elements of the same disclosure. And an example of these is, that's only one, but an example of this is financial effects, where clearly we have the same objective, and it's something also important for investors. But in our case, we made an extra effort of detailing which are the specific data points for physical risk, transition risk in terms of financial effects. So there is an extra level of detail. And the second class of these disclosures are those that respond more closely to the policy objective of Europe with the CSRD, which is a puzzle, a piece of a complex puzzle of sustainable finance regulation and in the Green Deal. And so for that reason, we have more details on impact materiality and how to assess performance in relation to the climate objective. So that's the reason why you see this list of additional disclosures.
Yeah, maybe just to go back to, if I was a company, how would I be thinking about this list at the back? So the first part of this document is all about where we've got the aligned climate disclosures, or where with a bit of extra information you can provide the information in a way where we get to the same place, because we're both asking for that information, or you can provide it in a way where both sets of requirements are met. What this last section does is it really sets out that if you've started with S2, the IFRS standard, this is extra information that you need to provide in order to meet the ESRS requirements. And so this is really designed to sort of show in two parts. This is what's aligned or can be aligned, and this is what's additional. And we thought that by setting it out this way, and we had many hours of discussions about how we present the document, that this was a neat way of sort of encapsulating how to think about this is the common package, these are the incremental pieces of information. And overall in part one, this is how you think about materiality and presentation. So that's how we've tried to pull it all together. So really hoping that this will be in practice helpful for you all. Done?
Done, think, yes.
Thank you.
Maybe if we had one or two, but not more, questions or comments from the audience here in the room, that would be welcome. Anybody? No, you are so mesmerized that, and it's so simple and neat that there is no issue at all. Okay. Yes, please.
Thank you. Marie-Adélaïde from LSEG, London Stock Exchange Group. As you might know, we're a strong supporter of sustainability reporting. We actually just issued call to action to government to implement ISSB standards by 2025 with the UNPRI and with the UNSSE. I just have a question on the interoperability. Apologies if this was covered at the beginning of the meeting. I wasn't able to join early. We've heard several times comments from the Commission and from EFRAG about some kind of equivalence between ESRS and ISSB, when if you comply as a company with ESRS, then you would be deemed to be compliant with ISSB standards and reporting. So my question is that still the case, or would you be expected by the ISSB to add, all the additional standards that you just described to be deemed compliant with ISSB when you report with the ESRS already? Thank you.
Maybe I'll
that was illustrated, but you can clarify.
Maybe I'll respond in my words, and then Chiara, please feel free to add. So that's a really, of course, core question. So from my side, as a result of this interoperability guide, if you follow what's in the guide, it's possible to approach ESRS in a way which enables you to assert compliance with the ISSB standards. So as long as you've looked at that section which says these are the things to be aware of if you've started with ESRS in order to provide the disclosures that meet the ISSB requirements, and you've considered that financed emissions piece, which is applicable only to a few sectors, but if it is relevant to you, if you've considered that, and you've been careful with the presentation part that we made at the front, then yes, it is possible to assert compliance.
Yeah, and if I can complement, this is exactly the main message that we want to pass today, that if you apply ESRS and you want also at the same time to comply with the ISSB standard on climate, you are almost there. You only have 7 specific data points to consider, and 1 if you operate in asset management, commercial banking and insurance, 1 missing disclosure, which is the finance emission. So the message is you are almost there, you are there. It's a very limited number of items which are listed in section 3 that you need to be careful of.
And ensuring that the investor material information is visible, that presentation.
For the presentation part, yeah.
Okay, thank you. That was not in the script, but I think that any lesson, first lesson, requires at least 1 question. Thank you, Marie-Adélaïde. Thank you. So I will say a few words and then hand over to Emmanuel. It's a great pleasure for EFRAG to host together with the ISSB this event that we jointly organize, and also to welcome Alexandra Jour-Schroeder, who just joined. Thank you for being here from the European Commission. It is an excellent opportunity to explain and celebrate a milestone moment for sustainability reporting in the European Union and globally. In such a context, I would like to share with you 3 points that are dear to our heart. My first point is about walking the talk, if I may use this colloquial expression. From day one, as far back as 2020, in fact, it seems ages ago, in line with the very first statement of Executive Vice President Dombrovskis when he launched this major initiative, EFRAG said that under its mandate and in the context of the EU developing its legal and regulatory framework, we would build on, I quote, we would build on and contribute to the global development and momentum of sustainability reporting. And this is just what we did, without deviating from this course of action and commitment. It makes good sense for all stakeholders who expect consolidation rather than fragmentation. It is also a duty for standard setters who have to be very careful not to adopt a competitive and ivory tower approach. Confronted with the challenges of developing sustainability reporting at a fast pace, a robust cooperation is not a luxury, it's a must. One of our priorities, a natural consequence of this clear direction of travel, has been to establish since inception a thorough and fruitful dialogue with the IFRS Foundation. Therefore, with the TRWG to start with, and then the ISSB. No need to say that EFRAG has a long-standing history of constructively interacting with the IFRS Foundation, initially in the financial reporting space, where we had the opportunity to work with Lloyd already, and that the two organizations and their leadership did not need long diplomatic discussions to organize appropriate channels of communication. EFRAG actively participates with the European Commission to the international discussions held in the Jurisdictional Working Group, JWG, and in the Sustainability Standards Advisory Forum, SSAF. In parallel to these two platforms, it was clear from the beginning for both parties that highly dedicated bilateral sessions were needed. They have been organized at every stage of the standard setting process, during the design phase, during the elaboration phase, and after adoption during the final interoperability crystallization phase. Both parties realized even if it was somehow innovative, the interoperability approach was the most promising in order to combine the political ambition of the EU as a jurisdiction and the global momentum supported by the global baseline under development at ISSB level. The saying goes as follows: when there is a will, there is a way. And both parties constantly demonstrated their willingness to reach a positive conclusion. There's ups and downs sometimes, but okay, that's life. However, I have to say that there was doubt and skepticism about our capacity to finalize. For me, as soon as the two sets of standards were shaping up and that efforts to converge were made by both parties, it was clear that interoperability was achievable and indeed nearly there. I said it in many instances, but I was confronted to what I call, with a big smile, the St. Thomas syndrome. People want to see to believe. So today is a great day because everybody can see that the interoperability is a reality. Let me, at this juncture, pay tribute to the teams that contributed so much to this happy ending. It was not a given and required dedication and a strong sense of what stakeholders and markets expect. Warm thank you. My second point is about the mere substance of what is achieved with the document that has been presented by Sue and Chiara, and that is now available following our joint publication. Let me mention that we had two goals on the EU side. First, to avoid multiple reports that would be confusing and burdensome. Second, to foster international comparability to the maximum extent possible. Mission accomplished. The interoperability mapping we have put together is just doing that. Lloyd and Chiara del Prete presented the content of the document in their first lesson. There will be many others, I guess. They elaborated together with the teams. The structure of the document, with its 4 sections, reflects the excellent level of commonality achieved. There is no opposition, there is complementarity. Yes, the ESRS have a comprehensive detailed coverage. Yes, the ESRS are inspired by double materiality. Yes, the IFRS standards start from an investor standpoint. Yes, they address climate in details as a priority. But this does not mean that the ESRS and S1 and S2, as adopted by the ISSB, are not compatible. On the contrary. As explained, the first section clearly indicates the robust alignment. Sorry, I had a communication guru that was telling me, you know, communication is like painting, you need several coats of paint. So I'm sorry if I repeat a little bit what Chiara and Saskia already mentioned. So the first section clearly indicates the robust alignment between the 2 sets of standards at the level of key principles, how the investor focus is addressed in a similar manner, how there are no significant presentation issues if you are careful, and how the ESRS can be used as a reference on sustainability topics beyond climate under the ISSB system. The second section illustrates the high level of commonality achieved on climate. People tend to put too much emphasis on differences. In this section, we insist on the many disclosures we converge on. And the footnotes are just explanations. They are not here to create interpretation issues. This is fundamental, and this is a key message. The third section illustrates how an ESRS reporter can easily comply with the ISSB required disclosures on climate by paying attention when preparing the sustainability statement to a very limited number of points that might trigger unnecessary minor differences. The fourth section is the other way around, i.e. how an IFRS reporter can comply with the ESRS required disclosures. In line with the CSRD framework, what has to be considered is more substantial, but this section illustrates that in fact we are in a building block approach, and companies can leverage their IFRS reporting to meet the ESRS requirements if they need or want to do so. This very positive outcome is most welcome. Let me highlight that under the umbrella of the ambitious sustainability reporting regime organized by the CSRD, the key features of which we are all familiar with, the European Union is one of the first jurisdictions to embed the global disclosures into a system that is timely and that is addressing many entities in the economy, all large entities. And large is not so large in the EU, as we all know. This is no little achievement, and both parties can be proud of it. Let me add that the ESRS have also a high level of interoperability with other key initiatives, in particular with GRI and TNFD, and that we strive to create the right data flows needed to meet the reporting obligations deriving from other EU regulations. Consistency and quality of data for full decision usefulness is our goal. Creating the second pillar of standardized corporate reporting alongside financial reporting on an equal footing is indeed the way forward. My third and last point is about looking forward. Interoperability should not be perceived as a static exercise. It is dynamic. First of all, at EFRAG, we do hope that many jurisdictions will find the appropriate path to quality sustainability reporting in line with the global challenges and expectations we are confronted with. It is a major endeavor which we support, and on the basis of the commitment and outcome we just demonstrate today, EFRAG stands ready to contribute. Then, of course, in the dialogue between EFRAG and the ISSB, we do need to consider the points on which to focus medium and long term. In the interest of time, I will only mention them. The digitization of reports under XBRL is key. Interoperability needs to go beyond interoperable paper reports. Sustainability-related data is used primarily under a digital format. We need to offer users and preparers the right bridges to avoid here also multiple reports, difficult to prepare and difficult to navigate. Lloyd and myself have a dream, which would be to be able to press a button and to read IFRS or to read ESRS automatically. We'll see if that dream materializes. Then the development of sector standards by EFRAG needs to take stock of the SASB experience that is now integrated into the ISSB and which is worked upon by our ISSB colleagues in order to internationalize the disclosures. In the interest of interoperability, we hope that cross-fertilization will be our joint commitment. Coordination of implementation support activities is also key. We know that in a principle-based environment, interpretations develop, sometimes almost spontaneously, and beyond standard setters' expectations. And it would be awkward not to see diverging practices that would be contradictory with the quality objectives and the global approach that we support. Finally, in the development of the future IFRS standards by the ISSB, I hope that cross-fertilization will be the order of the day as well, and that we will be able to achieve a similar level of interoperability to maintain the system we have today explained and presented to you. With this, let me thank you for your attention. Thank you so much.
Merci, Patrick. Thank you, Patrick, for this comments on the first inaugural lesson about interoperability between ESRS and ISSB. Again, it's a pleasure for me to be with all of you, and I think I should start by saying the first charts that I ever saw about interoperability was my first business lunch as the chair of ISSB on the 6th of January 2022 in Paris with Patrick, where he had his little notebook and he drafted many things about ESRS, trying to make the 101 lesson to me, coming as the chair of ISSB, about how things were working at EFRAG and what the plan was. And I still have those 10 pages. I should have brought them with me, by the way. I also realized that at that point in time, there would probably be a lot of work to be achieved if we wanted to reach to today. So that has been a journey. Patrick has alluded to some important steps of that journey. Indeed, the draft of the CSRD in June 2022 under the French presidency of EU stated very clearly that the ESRS will incorporate the ISSB standards to the greatest extent possible, and that, as Patrick said, EFRAG and EU would contribute to the global baseline, including through your dedicated continuous work with us at the jurisdictional working group, with the EFRAG team and the FISMA team. Some of them are in this room, and many thanks again for all the good and sometimes very frank and hopefully very frank conversations that we've had every month, literally, since 2 years now. So before we start talking about today's document, what I would like to say is that we were very pleased, of course, jointly with EFRAG and the EU in July 31st, last year, to announce that we had reached a high level of alignment on climate and a mechanism for interoperability when the delegated acts became public. But I also realized, and I had realized before, of course, that this notion of alignment is good, but it's not enough. And this is where I think Sue and Patrick took on the challenge of going beyond that question of alignment to produce a true interoperability mechanism that is workable practically by companies. I think Chiara's made the point that the reason, in a way, this document is simple because there has been so much work being done on the fact that we would have actually common disclosures. The true interoperability between standards starts with and resides in the fact that they have common disclosures when topics are the same. When, of course, topics in particular for the ESRS go beyond the remit of the ISSB global baseline, they have to be different and they have to be additions. But as much as possible during this year and a half work of our team together, we've tried to identify as many as possible commonalities that could be expressed in the wordings, in the organization of the standards. And this is a very strong reason why this document is so short. So I just want to flag this because really, you know, as Patrick said, I mean, it started in 2020 here. This is not the case for many jurisdictions. And so in the future, I think the notion of alignment won't be enough. Because if that is only about two standards talking to each other, but if you start to become 20 different standards, whether they are voluntary or whether they are mandatory, trying to be more or less or declaring a high degree of alignment, they could all be aligned with each other to a high degree, and yet that would not be on the same subject, and then the companies will always have to do 20 different reportings. That's the end for the investors' comparability and the need to move the capital markets to fund the transition that is so desperately needed to come to more resilient business models and economics overall. And that's the end of the game for preparers. I've been a preparer for 20 years, signed account for 20 years as CFO, CEO, and chair. And I know what it means when you need to be reporting on the 14th of February of the year that you've just closed, if you have to do it in 20 different languages. It's simply not possible. So this is to say that what the team has done for 18 months, even before starting on this document, has been the foundation of why this document is so simple in a way. The second point is, I personally discovered that document late because it's been worked and reworked so many times in a pretty short period of time overall compared to the overall scheme of things and where we are in establishing both the ESRS and the global baseline of ISSB. And I have to say it was a shock for me. I was expecting a much longer, more cumbersome document to read. I'm not a standard setter by essence, unlike a few of us here, or certainly one. But I've been a preparer, and I know how to prepare. And when I read it, what really struck me was this quite, I think, quick way where both of you went through the existence of asterisks, double asterisks, and footnotes. I mean, pay attention to the footnotes. This is where the substance is really. It's incredibly powerful. They're super well written, very short, very precise, very concise, and they explain any preparer how you can actually navigate from one standard to the other. So there is a high level of alignment, and yet that is not enough to prepare. So this is delivering the key for navigating from one standard to the other, again, with a very simple, not simplistic, simple and precise way. I want to be clear that there are options on both sides that will get a preparer wanting to be in compliance with both to a dead end. Some options would lead you to a dead end. So you'd better read what the options that are compatible that will lead you to the bridge. But this is a detailed, simple, short guide to it. It's like 15 pages plus tables. This is not 500 pages. That's not a one-pager, sorry. And this is not yet digitally powered. Hopefully, when the digital taxonomy of ESRS will be finalized, that can be the case to a great extent. And I would say this would lead me to where I think my personal focus is really for both the CSRD as a European citizen and also for the global baseline. I think the critical strategic topic for us now is to ensure that companies use these tools as strategic tools, not as compliance tools only, maybe as compliance tools. But as you know, you can design regulations and companies first try to establish the costs of complying before complying. That's true in France, and that's true all over Europe, that's true in the world. That's what they do. So the best chance, the best opportunity, and I think this is also why this is driven by a policy here in Europe, is to effect change, not to comply with a disclosure reporting system. This is not enough. That won't lead to the change that's needed. And why I'm so excited about this document is that I think it highlights how strategically CSRD can be applied to effect change in companies if they believe that they have to effect change in a number of sustainability risks and opportunities that they have, and they cannot express them to their capital providers or to the people that are, or organizations that are providing resources to them. So at least for those topics which affect the prospects or can reasonably affect the prospects of the companies, I would really urge my former colleagues, CFOs, CEOs, board members, to look at the CSRD as a strategic tool for change and as a way to obtain ultimately, including for them, of course, that would start from the ISSB or go to the ISSB, because this is where we focus, capital allocation, to ensure that they have a competitive advantage in the way they raise capital for their transition, for their climate resilience plan, for their socially more resilient, inclusive plan, because this is where the future lies. So I will not be longer than this, but I really hope that after so many conversations about the complexity of reporting and everything else, that the hard work of the teams on aligning on the substance of climate, on the materiality identification within ESRS 1 paragraph 48, and other gems that are in both sets of standards to ensure that they can talk to each other, that this navigation tool will ensure that corporates can use that to build their transition plans and to fund their transition plans as they strategically believe that's the case. They should be. The last thing I would say is that it looks like the end of a long process, and I can tell you, unfortunately, that's the start of many more processes to come. And thank you, Patrick, for saying what you said about the SASB standards and your sector work. Of course, I could echo that in the sense that, as you know, the ISSB standard is now starting its next agenda of work, which will be research about biodiversity, human capital, and the SASB standards enhancement. And these are topics on which there should be, and I guess there will be, one way or the other, some work to be done, because then again, that tool here, that interoperability guidance, would have been much more complex, much more cumbersome, and maybe even impossible if some hard work hadn't been done before in establishing common disclosures for the standards. And so I'm not saying I will welcome this, but I know it's going to happen, and that I think our responsibility on both sides to ensure that we continue the great work that has started. And so thank you again for being on this journey with us.
Now, please welcome with me Alexandra, Jour-Schroeder. So if you want to come to the... Yeah, thank you so much.
Ladies and gentlemen, very good afternoon. To say it's a happy day. And first of all, I wanted to thank you to give me the opportunity to speak to this event that has been jointly organized by EFRAG and the ISSB. As I said, I'm happy, but I'm also honored that you have not forgotten the European Commission and all that, and that you have also extended your invitation on the occasion of the new guidance to us. And what I would like to do is to give you a bit our European Commission perspective. Yeah, now I think we have all understood that today's event marks the publication of the guidance. And before I go a bit more in the substance, I think this is really a good case to express also our sincere congratulations and thanks, because it is a very important document, and I can only echo what has just been said by Patrick and Emmanuel. But it's good that we like it. What is important is, in the end, that I'm really sure that, having looked into that, is that it will serve as a yardstick, as a yardstick for thousands of companies in the European Union, but globally, and will support them in their efforts with sustainability reporting. And I think this is really a big step. And if you work every day on that, you may not find it anymore so fascinating and spectacular, but I think it is really a bit of a revolution. So a big thank you to Emmanuel, Sue, Patrick, and Chiara, of course, but also for your teams. You know, with many people behind who have really, contributed over some time, not so long actually, indeed, to have this really excellent result. But also the hard work, and there is a lot of commitment. You can sense it, and there has also been a good cooperation. This is also not obvious always, as we have heard, that has gone into this paper, because what we also wanted from the, let's say, the policy maker perspective is that this is a document that is really used. So it's not a document you read once and then you put it away. It should be a document, even digitally, you should have on your desk every day and to look into that. And therefore it has to be handy and operational. As it was already said, Rome wasn't built in one day, and also this document has come quite a long way, a bit from different perspective, if I may say. First of all, there has, of course, been a lot of demand for this guidance. I mean, you know, I see many stakeholders and everybody who came to me speaking about the CSRD implementation, the international operability, has asked to have guidance, and I fully understand, and that is needed. On the other side, I think we have also seen, going back to Patrick's picture of Thomas, a bit of doubt by some that this document could or would ever been produced. But, you know, as always in life, extraordinary dedication is a guarantee for success, and I think now we have the reality in front of us. But maybe let me still draw a little bit the broader context. I mean, again, I was reading it actually yesterday, and I have also to admit sometimes it's a bit technical. It has to be technical, but in reality, and ultimately, I think the concrete translation of what we have now is indeed a translation of our shared political commitment to zero net emission of greenhouse gas emissions by 2050. And that is something we should not forget about it in all the technicalities we have. And, you know, in general, the objective of sustainability reporting is actually quite simple. And maybe if I can use a comparison, I mean, the reports that needs to be done, I mean, you could compare them a bit with some vessels of transparency and accountability, and that's also what we have in financial reporting. But to play their role effectively, financial markets need good quality. I mean, this is as evident as it is. Good quality, comparable information about the effects of sustainable related risks. Also, very important, the impacts, and I cannot stress it even more than I do today, but of course also about opportunities for making investment decisions. And this is all true, but as we know, the devil always lies in the detail. And in particular, when it comes to new obligations, and I think Emmanuel has put it very clearly, this shouldn't be seen as a compliance exercise, but a strategic exercise. Another point that has been derived from day one, from the very early days of sustainable reporting, is indeed the concern that standards will start all over the place. But how can they work together? How can they interact? How can we somehow ensure a certain comparability, while of course also at the same time considering some specificities. And that has been part of your journey, your joint journey in doing this guidance. And I think this has also only worked because there has been a very good and trustful cooperation, also trying to understand each other's position. I think this is always a recipe for success. And I mean, I'm not repeating what has been said by those who have spoken before me. There is indeed a very high degree of alignment between EU standards and ISSB standards, and of course, this is also very important for us in the European Union. What we have done, we have effectively incorporated the ISSB global baseline into our European standards, and I still would like to stress that we have been the first jurisdiction to integrate ISSB standards in our domestic legal framework, doing so last year, actually within a matter of weeks of the ISSB adopting its standards. And therefore, I hope we also recognized and that other jurisdictions around the world will follow and similarly integrate the baseline into their own legal frameworks in the manner that best suits them. And I have to say, well, we have every respect for really the great work that has been done by the ISSB. It is indeed not a secret that European standards include some reporting requirements that go somewhat beyond the global baseline. And our standards do that because in our context, in our European context, we believe that there are additional pieces of information that are important. And that goes for both, for those who want to invest, and on the other side, the users of company reports. And it is indeed now the very nature of this baseline concept, the flaw, that going beyond is not a problem in our view. What is problematic, of course, is when jurisdictions would fall short of the baseline. So I think this is important to keep in mind. The question is now, and that is not a simple one, how do we get this all implemented? And I can tell you from our position as a regulator and policy maker, this is now very much our concern to make it happen, because it's nice to have all these standards, but if they're not operational, they're not usable, we would have failed. Again, we need all these standards for the resilience and success of companies, and therefore it is necessary that this is working. And again, we did last week a quite interesting conference on usability. I also don't want to hide things, because I think it is quite a challenge for companies to apply the new standards. The first thing you do things is always more difficult than you do it the second time. So the question for us is, of course, not to leave the companies alone, saying here are the standards, go ahead and apply them, and good luck with that. But what we want to do as a public organization, we want to do whatever we can do to support the companies in applying the ESRS, and we're doing this in a very close cooperation, of course, with Patrick and his team. I have to say, I found the meeting last week very good because we got very good questions from those who attended, and there were thousands of companies also online. And you could also sense some were maybe the main issues where we need to get guidance. And we will, as I said, we will do what we can to help. I wanted to flag that we have a very useful technical support initiative in the European Commission, the TSI, through which the member states can also receive technical advice how to best help companies to implement the ESRS, but actually also the taxonomy. We will publish a series of questions and answers. That's a bit classical, but always a very good tool. Also on the CSRD, and I'm pretty sure that this will also help to clarify a number of sometimes also legal questions about the framework. And maybe just to give you an example, this is about assurance rule and when and how reporting requirements may also apply to non-EU companies. I think this is indeed a bit a tricky, not so easy thing, but we can then explain this, and I think then it will help a lot. And our Q&A is also in addition to the work EFRAG is already undertaking to provide implementation guidance, and of course also to answer a lot of technical questions. And again, in this overall context of making things usable, this guidance fits certainly very well in order also to reduce burden for companies who will have to apply it. As we have already heard, I mean, it clearly shows now how a company that reports according to ESRS with minimum additional efforts. I was just coming in when you were explaining it. It can also comply with ISSB standards, and I think this is a quite smart solution that has been found. It should and therefore avoid the need or expectation that there is a double reporting by European companies. I think we have to walk the talk, as Patrick said, but all in all, I think people will quickly understand how it works, and it's not rocket science, indeed. Again, picking up what Emmanuel said, our work is not over on interoperability. It will have to continue because all our frameworks in our respective areas will and should evolve and develop. And on the European side, we know, and you will certainly also know, that this relates in particular to development and adoption of more sector-specific reporting standards. And in this respect, we also welcome that the ISSB may in the future also develop standards on biodiversity. I think this is a very important topic. I was recently speaking on a conference in Italy, and there were a bit of concern that climate is too much in the focus and biodiversity is somehow seen as a niche problem, but it is not so important that we work also on that one. And maybe another one is human capital, which is of course also very, very important. So again, I think the first steps are always the most difficult ones. We have now a good system, a good method, how we can work on an alignment and interoperability. I would echo Patrick that we need this to have this a bit more digital. And our world is digital, and digitalization, digital taxonomies would enormously, of course, facilitate the whole application, the lives, the practice of users and companies. And I think there are also expectations from their side that we are doing something. And that goes actually for both sets of standards. But to conclude on a positive note, and anyway, I think is a positive day today, I think we have now a good basis to build on. There will be new challenges coming, that's logical. But on what we have, I'm confident that this will go well. So again, thank you very much to all of you for your great effort, hard work, and let's continue to work together. Thank you.
So I think we are spot on in terms of timing as compared to what we had anticipated. Thank you, Alexandra, for your speech and kind message, and also, looking forward to the continuation of our cooperation. So I don't know, Emmanuel, if you want to say something additional. If not, I will thank the persons that have attended online, and we will close this initial first session, brilliantly presented by Sue and Chiara. Thank you so much, and a warm round of applause to the teams.